Thank you. I'd like to call the Special Finance Committee meeting of November 5th to order. It's 4 p.m. or plus or minus 4:01. Call the meeting to order. Please stand for the pledge. Ready to begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Roll call. Most directors are here. Approval of agendas. Are any changes to the agenda? If not, motion to approve. All motion to approve. Second. All in favor? In favor. Aye. Okay, agenda is approved. Approval of minutes. Did you have any changes to the? I did not. Everyone looked good. If not, a motion to approve the minutes. Make a motion. Seconded. All in favor? Aye. Aye. Thank you. Item 4, review of audit report.
So we have Chris Brown, sorry, Chris Brown here to go over that.
All right. That begins on Big 5.
Okay. I'm going to take you through the management report first. I'm going to do a little bit different. Just spend a little bit more time on that.
Let's go back.
Management report.
Yeah, let's start in the back.
Page 112. Yeah.
112.
Okay. Well, all right. Make reference to mine. In times of need. All right. So, the audit. What is the audit? And what are we doing? So, basically, 2 reports coming out of the audit. One being, of course, the act for the annual report and the management report. Since we're in finance committee right now, I think it's best that we go ahead and go over the management report on page 114. And I'm just going to read some highlights off of this. It's really critical that everybody follow along exactly. But basically, it's the management report spells out our communication to you. Since we have not had an opportunity to speak really before today on this matter, I want to go over these things. But basically, in planning and performing the audit, and we are considering the district's internal control over financial reporting, your internal control, as a basis for designing the audit procedures that are appropriate in circumstances and for proposed expressing our opinion. So basically, we're taking a look at the internal controls of the entity to design our audit programs, which we use in performance of the audit itself. So that's kind of the big picture there. We did not identify any deficiencies in internal control, and that's that last paragraph on page 114 for you. It says, given these limitations, but what that means is, since we're not looking at every single thing out there, it says, given these limitations during our audit, we did not identify deficiencies in internal control or financial reporting that we consider to be material weaknesses. A couple type of weaknesses. There's certain deficiencies and material weaknesses. Essentially, a deficiency is going to be exists when the design or operation of a control being how you do things, how you basically design your methodologies for your transactions. This is your purview there. But a deficiency in internal control exists when the design or operation of a control does not allow management or employees in the normal course of performing their assigned functions to prevent or detect a material misstatement. Material weakness is basically, there's a pretty good chance that you're not going to catch it. And as we just noted, there were no material weaknesses that we identified in performing the audit itself. So kind of in a roundabout way, that explains what we're doing there. I'm going to go ahead and move to forgive me for the delay on this. So essentially, it's going to be like page 117 through the end of that document. I'm just going to hit the highlights that are highlighted in dark. Responsibility in relation to the financial statement audit is communicated in our engagement letter. Our responsibility as described by professional standards is to perform or express an opinion on whether the financial statements have been prepared by management with your oversight and are presented fairly in all material respects. So essentially, you're preparing the financial statements. We are auditing those statements. The rest of the document basically goes through some of the bullet points. It discusses the planned scope of the audit, which says we conducted our audit consistent with the planned scope and timing, compliance with all ethical requirements regarding independence. Essentially, we are required to have a certain degree of independence when we're conducting the audit. We're not allowed to get involved with making corrections in your books. These are the responsibilities. Actually, it came out really clean. It was a very clean audit. The adjustments that were made were with regard to the pension and the lease. So it is really clean, really clean. So kudos there. Let's see if there's anything here really worth mentioning. I just wanted to kind of go over the highlight of this document. Qualitative aspects of the entity's significant accounting practices. We found no deviations with regard to significant accounting practices. Your estimates seemed reasonable. There again, I'm just kind of going from page to page. We did not identify any unusual transactions. We did not identify any suspected fraud when performing the audit itself. Okay. With regard to any difficulties encountered during the audit, there were none. It went very well. As far as uncorrected or corrected misstatements, I like the word adjustments better. I don't like misstatements, but there at the very end of this document, and like I said, it was very clean. It was essentially the pension adjustment and the lease. So it was like GASB 68 and GASB 87. So if you want that citation. Disagreements with management, none. There again, it went very well. Circumstances that affect the form and content of the auditor's report, they were. Representations requested from management. We will request a management representation letter from you if you haven't done it already. You do it every year. It basically says you provided us with all the information that we requested. Management's consultation with other accountants. We're not aware of any consultation with other accountants. With regard to other information, kind of at the bottom of the page, it says nothing came to our attention that caused us to believe that such information or its manner of presentation is materially inconsistent with the information or manner of its presentation appearing in the financial statement. So essentially, meaning we did not come across anything in the financial statement itself that was misleading, and we agreed with the presentation. So there again, kind of went through some of this because we didn't really have a chance to get together auditor and members of the finance committee before this date. Wanted to go over these items and go over it. There are no questions with regard to that. I'm going to go ahead and move on to the financial statement. This is an ACFR or annual comprehensive financial report for the year ended June 30th, 2024. What I typically like to do is just kind of leaf through it. So where I would like to start is on, let's make it help me read.
5 is a slow number.
Okay, so probably going to be
7 is a table of contents. 11 is the district profile.
There we go. So starting on page 11 and the next succeeding pages is what we call the letter of transmittal. This is not audited by us. It is prepared by management and inserted into the document. We do look at it for propriety, but we don't audit these numbers as such. So if there are any changes that need to be made to this, let us know, and we're more than happy to insert those. So as of today, has anybody come up with any changes that they wanted in this section? Not that I'm aware of.
No, I think the description's pretty much saying it. I guess you could add another well to it if you did already.
Okay. I'm going to go ahead and move on to page 23. I have a question. In this table here, it's June's last name Ward, or is it a different setting?
Who is that's
Setting. Okay, so let me go ahead. And that's
Yeah.
SEV.
SEV.
Okay, so we'll go ahead and accept you.
One question
yeah.
on this page. This is a draft.
Yes.
When does it come out as a final? And
Upon approval and upon the completion of the final procedures.
okay,
There's
so
concern
some of the board members may be different.
We're trying to get it completed. But,
Okay.
Next month while you're still here.
Okay.
Well, these would stay because this is supposed to reflect those that were in place at the time.
At the time. Okay.
Yeah, so as of June. So
That was
these should stay.
yes.
Moving on to page 25 is the certificate for achievement for excellence in financial reporting. This is the 9th year that you've received this. It's been a while. So congratulations on that. There again, we fully anticipate that you will submit this report to GFOA for the 2024 report as well. So,
Good job.
and this really,
Good job.
yeah, this really does mean something. So it's important. Go to the auditor's opinion. Thank you very much. So the second paragraph is kind of the essence of the auditor's report. It says, in our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, the business type activities, and each major fund of the district as of June 30th, 2024. So it's a clean, unmodified opinion. Let me go ahead and turn the page. This kind of ties in with sort of bullet points there. This kind of ties in what I was talking about in the management report. It's a little bit more concise than what I was saying in the management report, but those bullet points really spell out what the audit is, where and what the auditor's responsibilities are to exercise professional judgment, identify the risks of material misstatement of the financial statements, obtain an understanding of the internal control relevant to the audit itself, evaluate the appropriateness of accounting policies used, and conclude whether, in our judgment, there are conditions or events considered in the aggregate that raise substantial doubt about the district's ability to continue as a going concern. So we definitely are you don't have going concern issues. So yes. So what I'm going to ask you to look at now is I gave you this handout. And for anybody that's online, this is going to be, pardon me. So for anybody online, on page 33 and 34 of the package, we took this table And I added some columns that basically calculate the change in governmental activities, business type activities, and the total district from year to year. And we did that for both the condensed statement of net position, and we did that for the condensed statements of activities. All right. So the first page here is assets. And here again, like I just spelled out, this is in management's discussion and analysis. These tables are an aggregated view of the operations of the organization for the year. We don't need to go through every number. I just did this so if there were any questions or we wanted to see what the variants are, we can see that. As far as the presentation, it's broken out by governmental activities, so we can see a change from year to year, the business type activities from year to year, and the total district, both governmental and business type combined together, and what the differences are in those totals. So we can see that total assets for the entire district increased by 2,918,000. The year was pretty stable. It was really stable, really stable. We see some changes between non-current assets and current assets. We see some movement between investments and cash in the year. So that's driving a lot of that. Capital assets, we can see a decrease from year to year of approximately 606,000. A lot of that's being driven primarily by depreciation expense itself. Deferred outflows of resources shows that it went down approximately 10,000. The deferred outflows of resources, the balance in 2024, so that's going to be the third column from the right, the 616,000 and change, and that's going to reflect amounts in essence that are attributed to pension obligation that will be applied in the next year. That's kind of the big picture. Okay. It's not 100%, but that's kind of the general. With regards to the liabilities, we can see that the liabilities went down approximately 1,021,000. Big picture change in the current liabilities. It's pretty small considering the size of the entire enterprise. Non-current liabilities, the decrease there is in essence a decrease in debt payments for the water enterprise. Deferred inflows of resources, it's kind of the other side of those deferred outflows. It's related primarily to pension and the leases. And we can see that they went down approximately 23,000 and change. With regard to net position, the very bottom category, excuse me, net position is kind of like your net worth. It's all of the items that are listed above: assets, deferred outflows, less your liabilities, less your deferred inflows. This is what's left over. Okay, it's kind of like your net worth, and it's shown in three, at least in your situation, three constituent parts, being what you've invested in your capital assets. This is net worth involved in that. You've invested cash. There are amounts that are donated, but cash, less depreciation, less any debt that is outstanding on those assets. And that's listed there. We can see it went up approximately 248,000. Restricted, if we look at that 2024 column again, on the restricted, that's 6,186,000. Those are amounts that are not to be used for anything other than their intended purpose. I believe they're loan proceeds that were pending at June 30th to be utilized. So basically just showing they're sitting there ready to be used. You can't use them for anything else other than what the money was borrowed for. Unrestricted is kind of what's left over. It doesn't represent cash. It's just what's left over from assets minus your liabilities minus your capital assets and restricted. And we can see that it went up approximately 3.6 million. I don't know if you recall me saying this in the past, but when I'm looking at financial, I like to see an improvement in this for this line item from year to year. There can be many instances when it might go the other direction, but long term, we tend to like to see an improvement in the restricted, because what that's telling you, big picture, is that the board management are setting rates and keeping expenditures, you know,
Don't have negative cash.
you don't have, yeah, essentially. So you're basically looking your budget correctly. Okay. So it gives you the opportunity to build your reserves when you see them. Okay? Now, the next page is the condensed statement of activity. And again, if you're looking at the agenda, it's on page 34. Same thing, but this relates to revenues and expenses. And I've added columns to show the change in each of the governmental, business type, and total district. I'm going to do a little reading off of the financial statement itself to kind of go through these numbers here. So revenues, expenses. Revenues are broken out by program revenues, essentially what you do for a living, and general revenues, property taxes, interest, things like that. Okay. So the revenues and expenses are typically broken out in that manner. And I am literally reading off of page 34 on the agenda packet. And the numbers reflect in that table that you're looking at. But it says total revenues increased 1.5 million to 14,254,000. The district's program revenues increased by 1,250,000 and change, due primarily to increases of 634,000 and change in monthly meter service charges related to an increase in rates effective as of November 2023, comma. In addition, 181,879 in water consumption sales due to an increase in rates effective in November 23. I'm going to ask a question about that in just a moment. 381,000 in other charges for services for the water fund due to an increase of meter installations and capacity fees compared with the prior year. And 55,000 in other income for solid waste fund sourcing from the SB 1383 Cal Recycle grant received. Now, I know I just threw a bunch of numbers at you, but the way that the increase is being attributed is solely due to the rate structure itself. And I'm wondering, I don't have this in front of me, but this consumption, was there a sizable consumption change that probably should be included in this description, or do we think that consumption was fairly?
Well, here it's most of the increase was due to the meter charges.
Yeah.
So mostly because there was a slight change in the rate structure, there was a little bit more of the cost allocated to the fixed part of it.
Because consumption is probably about what it was.
Yeah, consumption.
So there was a
Percentage wise, less than probably less than 10% change.
Excellent.
Even though there were what 50 new, I don't know,
Yeah.
quite a few new meters. I think
Which is
consumption,
surprising.
yeah, the consumption probably was
Back to zero.
fairly stable the last 2 years or
Okay.
even 3.
Excellent. Okay. So that related to the program revenues side of things. Now, with regard to the general revenues, I'm not going to read all of this, but essentially, property taxes, you saw an increase of approximately 178,000. Interest earnings, we're seeing this amongst all our clients who have stable balances, I should say. They didn't move a lot of money around with regard to investments, but you had an increase there of approximately 200,000 as well. Gain on disposal of assets, so you sell some equipment, and it's basically the difference from what you realize, and it's net book value 55,000 there. And in other category, we saw a decrease of approximately 150. With regard to expenses, I'll go ahead and read off of this because it's pretty concise here. Total expenses decreased by 806,000, due primarily to decreases of 854,000 in water fund expenses, of which 464,000 in general and administration, due to actuarial driven adjustment in CalPERS. So basically, there was an adjustment to your pension expense, which is driving part of that change there. And that's just, as we know, it seems like every year,
That's
it's the fluctuation. It kind of just depends on what the market's doing and
How CalPERS investment.
how well they're doing. Yes, how well they're doing.
I think the water end was probably, we didn't have to rehab any wells.
Yeah.
Probably 300 grand saved in the water.
Yeah.
And we shouldn't have to for several years.
Okay, and we also saw, let me see, make sure now. Yeah, the 452 and transmission distribution expense, primarily due to current year decreases in repair and maintenance. Expenditures for tanks and wells, which were repaired the prior year. 47,000 in parks and recreation expense due to decrease in labor and capital outlay. 253,000 in water transmission. As you're saying, due to actual, so in this case, part of the actuarially driven change in the pension expenditure is running through transmission and distribution as well. We saw that affecting it as well. Last item there, we saw 29,000 in solid waste expenses due to increase in labor and retirement costs. So just looking at this table again, big picture, total expenses went down to 806,000. Kind of going back up a little bit. General was approximately an increase of 28,000. Decrease in parks and recreation of the 22,296. Street lighting looks like a change of approximately 5,000. Solid waste, an increase of 29,000. Loss on disposal of the house, that's just the opposite of what we had above in revenue, 18,000. And of course, the water, we had the 854,915. Change in net position, that's the third line up from the bottom. And we can see that the change was, let's see, I lost my place. The change was $3,953,106 for an ending net position of $59,086,417. So just threw a lot of stuff at you. When you're looking at a governmental financial statement, you're basically dealing with two things. You're looking at maybe your full accrual basis of accounting. You're looking at the modified cash basis. So there's a lot here. So we kind of opt to go off of these tables here to kind of go through the big picture. Any questions on that so far?
Where did the government change come from? Also, I know where water or business came from. The government increased by 1.2 million. So
in government, we have 179,000 in property taxes and charges for services. 48.
Transfers from other funds, 985. That would have been some.
We have that
Where
there.
was the other fund?
It was, so that was probably because we had to do transfers in the prior year. That we asked the did we transfer in prior year financial statements from government to water?
And now it came back.
No, well, that's now, well, no, I came.
Well, it looks like the big
No, it is.
number, the big plus number for
Yeah.
transfers is 985. That's most of the $1.2 million net change. So that came from
Yeah, I think
transfer
there's a,
funds.
Other funds somewhere.
I think there's a problem with the formula. Go to page, I'm gonna have you go to page. Yeah, there's a problem with that formula. It's not in your financial statement, it's in that column I added, okay, which is not in your financial statement. Go to page. Go to page 39.
Page 39 or what?
Yeah, because what's happening here, and forgive me for this, I didn't double check this. On this page that we're looking at here, we're taking this negative and we're subtracting a negative here. So if you look at page 39, look at the transfers to and from other funds. It's the 1, 2, 3, 4th line up from the bottom. That is going to be the true transfer numbers. Yeah. Yeah.
The first one, what's the? Okay, that's in 2023 is one. Okay, this year was 185,000. The change is actually it's a negative change. It's not a positive change.
Yeah.
Well, I'm not sure how this. It just doesn't look very good because it's not there. Okay, I see. All right. The change, there was the government activity, there was a transfer out of 1.1 million in 23, and there was only a transfer out of 185
Correct.
in 24.
Correct.
So the change is a positive 985,
985, you're right.
but it's not real money.
Yeah.
Well,
It's just a placeholder.
Just showing
It's
that-
just it's
the
just a
difference
change in the
between
amount of money
23
that
and
was shifted.
24.
That's
Right.
right.
Yeah.
You're
Just
right.
showing the difference.
That's right.
thank you.
Well, I was
Because
saying,
I was sitting here going, okay, wait a minute. I'm trying to remember what happened in the prior year to drive that such a large change there.
yeah, so in other words, in 24,
Yeah.
there
Right.
was a million less transferred out of government.
Yeah. Yeah. I was reading that wrong. Well, I'm glad we went to this because it made sense to me. I was like, well, okay, we got a problem here.
So in 23, did we have to transfer that to enterprise or where did we go with
I don't
that?
know.
That's a lot. It's a chunk of change.
Yes.
It may have been.
Yes, that's what this is showing is it came out of government and it went into enterprise.
Oh,
Then we did the rate increase.
We were low, and it was to help stabilize, and we were dipping into the reserves with all the meters. Percent on the meters and everything was really low. We did the transfer, and that's the 2 years we weren't able to transfer funds back to repay ourselves. We ended up, you guys authorized to transfer some funds
Okay.
to so that was
okay.
in 20 the prior year.
Yes.
Yeah.
Well, yeah. Okay, that all makes sense.
That makes
It's
sense to
correct.
me
It's
too.
just had to figure out
Me
what
too.
it meant.
Yeah, thank you. All right. So. So as far as the rest of the document, I wasn't really planning on going into detail because it's what we can talk about. This is going to be on page 40. And when I was talking about the complexity of a governmental and a business type combined operations, you have the full accrual basis, which we've been looking at, and then you also have the modified basis, which is on page 40, and it shows the individual funds here. And I wasn't going to go into any detail other than just to say that the financial statements you're going to see on page 40 and 41 are going to relate to the governmental activities by their fund and by the very nature of the modified method of accounting. It does not include debt or capital assets. Those are added back in that bottom portion that you see here. Okay. And then on page 42, 43, 44, and 45 are going to be the financials for the business type activities or essentially. Okay, looking for detail with regard to those various operations, you can find them there. These are all combined together and are shown in the tables that we just went over. Flag this, this page, just in case there are any questions about the pension liability. And,
What page is that?
this is on the actual documents 56. Really didn't have a talking point. It's like there again, I just flagged it just in case there was a question with regard to that. So it's gonna be on your page, yeah, 69 or 70. There again, I really don't have anything to add into that. The proportionate share of net pension liability, the total was 222,608, broken up between governmental and enterprise. The way that they typically, those costs typically follow the employee. There was a question that Jeff Palmer, actually wasn't a question. I asked him if we had everything with regard to the final changes. And he mentioned that there was potentially a change in demographic table. I don't know if that had been resolved yet or if that needed to be. And that, for everybody,
Well, I thought Jess was more to the debt ratio within that, the formula within that table. What page is that?
I'm looking for. Let's kind of the right one. Okay, so I wasn't quite sure if it was on 86, and it might have been resolved. I'm just kind of throwing this question out there. I guess I should just ask it this way. To the best of your knowledge, has the stats section been completed? But we can check on that. That's why I can verify with Jeff. I can talk to him tomorrow and see if there was anything.
The page that we were waiting, he was asking about the formula on was big page 103. So page 84 of your document.
Okay.
And I not heard back from him on those. Because I was posing the questions of what the percentages we're looking at.
Okay, yeah, I see that we were at.
See how they're both columns are the same, so I was trying to figure out when you're looking at the business type activities and the total.
Oh, okay. So with regard to, I'm not really answering the question, but the observation. So it says business type activities in the second column and total debt. Government does not have outstanding debt. Right? Yeah. So it would,
Well, we have
Um,
some debt. We have the three loans, right? Is that the debt you refer?
that refer to this
the
table.
water loans
Yes.
are for water.
Yes. Oh, this is. Oh, because you're saying government. Business activities. Yes.
Okay. Let me look at something here real quick. Let me check something there.
And parks loans are for parks.
Yeah.
I think the only government loan that we have was the Caltrans, and that's they paid
That's
up.
about paid off.
Yeah.
Yeah, so that does look like our total debt for business activities.
Mhm.
And it's the per capita amount, but I couldn't back into or figure out what the percentages were, so I asked, try to follow up with Jeff,
Okay.
how we are getting these.
I'll talk to
And then
him.
he was following, those are the ones.
Okay.
Just those two right there.
That include the construction loan in there?
The construction loan as in.
The 6 million that we
Yes,
borrowed? Yeah.
yes. So those values are correct, the dollar amounts
Yeah.
and the per cap. It's the far two columns on the right, the percentages are the ones I was trying to figure out.
Okay. We'll take a look at that first thing. Okay, so big picture. I dragged you guys through a whole bunch of stuff
I went through it pretty quick though.
So there again, I took you through the management report because we didn't have a chance to speak prior to this. Normally, so next year, I'd really like the opportunity to sit down with you guys, whoever's on the committee, and just kind of go through the audit before we actually start any of the process. We'll avoid the year end.
Oh, so I have a question. If we change our purchase policy and give higher numbers to the general manager of things, because the cost of things are much higher now, and I don't think it's working, but we talked about it in a board meeting. If we make those changes, then do you review that, like for the next audit, to see?
Yeah, one of the things that we'll do is when we are doing purchasing and disbursements testing, as part of the internal controls, is that we'll take a look at the original purchase order, who authorized it, and is in compliance with the purchasing policy. So
you don't actually look at the purchasing policy?
no, we will. No, we will.
Oh, you will?
Oh, yeah. We'll look at it. Says,
that's going to be changed, sometime.
Yeah.
But you'll look at it to make sure we're in compliance with it for the year. You're not gonna look at it to make sure you're okay with what the policy is.
We could. We haven't come.
We're even looking at.
Do you look at it, or
No, we
do you
read it.
just look at the results?
Right.
No, we read it. We take a look at it. If we see something that's really unusual,
Well, because they're talking about, the governor's talking about changing that from, right now it's pretty low, 25,000. They want to go up to like 150,000. So there's going to be a big change.
right.
And they're going to have to, the district's going to have to make a change in their policy. It's too low
Yeah.
for inflation. So
If we saw something in your purchasing policy that said a mid-level manager had authorization to spend 150,000 and only required one signer on
Oh.
a check and things like that, I'm being ridiculous,
Yes.
but
Yes.
we definitely would say,
yes,
come on, this is really opening you up to some fraudulent
yeah,
activity.
okay. Because that will change, and so I just was wondering whether you just look at the results or you actually
No.
look at the policy to make sure that it's copacetic.
We look at these things, we keep our mouths shut if there's nothing unusual.
Okay.
Because the minute we start talking, everybody starts worrying.
Yeah, okay.
And then as far as the audit goes in the end, as long as we're in compliance with what the board adopted, then we're good anyway.
Right, if
Or
everything's,
we'll adopt something that the lawyer
Yeah.
says is bad, so.
yeah, if something is out of whack, we'll go to management immediately. And then if it's still out of whack, we'll come to you. And we figure it out. So there again, I just took you through a lot of different stuff here, so. Any
Bottom
questions?
line, it's good,
Yeah, it went well.
and we didn't move forward.
Yeah.
Not yet.
Before we did move around.
Let's wait till next year.
Yeah.
If we ever get that building looking good.
You lost the last hour of your life.
Yes, we did.
All right.
Building for the repayment of that loan, is that gonna come out of the money from the proceeds of the dairy money, the lease money, and the money per ton that we're getting for the green waste? Towards the building? Yeah, no, it could be. Repayment of the loan? It could be. Yeah. The board has to make that decision if they wanna do that. It's in, the governmental funds right now. It can be used anywhere.
That's my report.
Thank you very much, appreciate it.
Are we, is the board meeting on the 13th?
Yes,
Okay.
13th.
I will be there. I'll just go ahead and hang out for the rest of the meeting.
No. You want to exciting?
What time is it? It's probably right.
5:45.
Yeah, hang out a little bit.
Time is killing me. Yeah, feels like it's 9 o'clock.
All right, that was item 4 was review of the audit reports. Item 5 is review of disbursements. Where is that? Have any issues? Did you have any issues with it? Okay, if we don't have any issues with it, we will move on to item 6, review of quarterly financials. Maybe that's it. 134. 134. I'll let you lead this. Lead the pack.
This is really. Let's see. For operational, yes, our water revenues. I do not. For the first quarter, slightly $41,000 over budget.
That's exactly right.
More than budget, so we're pretty much right on cue for the first 3 months.
See, it's not obvious.
Nothing huge. And then we have our service and supplies we're under budget right now, but again, those are kind of timing issues for the first 3 months. Yes. Same with utilities. That's just the timing of the Edison coming in. So we're looking good there. Meter installations, that's still above budget. We just keep selling meters.
People apparently don't care about the interest rates right now.
Almost nothing changed in the last couple of months. Yeah. Cash is exactly the same. Oh, assets went down, went up. Sorry, up. So. That's pretty low. Did you see anything? No. Good to do.
And then just goes on to the detail revenue statement. You guys have any questions? Because it's some. It's just a summary of just
140, what's the net income? We are favorable by 467,000.
Yes, but part of that has to do with the Chromium 6 placeholder, so not that full.
Okay.
467. Six. I know you have to back out that 70,000. I was wondering if there was another one, but if you take out the 70, and you're looking at roughly 400.
So still going positive.
Yes.
Nice. That's good. Yeah. Cash flow water funds, total revenue 3.6, total expense 2. So, and that goes depending on what bills come in. It fluctuates on a monthly, quarterly basis. Government fund. Beginning cash balance 4.5, ending cash balance 4.6. Parks and Rec, there's 6 million waiting to build a park.
Yeah, that'll remove the Joshua trees.
Yeah, that one, maybe.
It's only 19,000.
We're up to $600,000 to remove the Joshua trees.
$600,000. That's what it's up to?
Yeah.
It's ridiculous. That's crazy.
We're renting a dozer. The staff needs training on operating the dozer. So we're gonna do some training.
Yeah. So solid
So we
waste
knock it down to
has 137. The money left over that goes into, at the end of the year, goes into park, is that right?
That is what, yes, has been authorized, yes.
Yes,
to
okay.
kind of standard.
All right.
Yes, that brings us to your monthly aging.
The aging report.
This is pretty consistent.
Yeah.
You guys have any questions in open payable report? These were open invoices as of September 30th. All of these have since been paid out.
Do you have any questions on that?
I did not know.
Page 159 is the projects balance report.
Okay.
I think we have much going on in our projects right now.
Yeah.
Just a little bit of it's back and forth in the Civic Center project still.
Everything else is pretty much done, isn't it? Except the new tank.
in the new tank.
Yeah, that's just starting.
We'll start with recycle again on the new wells, the new well.
Oh, did you? On
Get
another,
ready,
on
get
another
ready
well?
to. Get
Just,
ready to.
yeah,
We found some property.
yeah.
Cash investment report, page 161.
Yeah, everybody's happy about that.
Yeah.
Their clients,
Yeah.
at least for now.
Yeah.
I don't know, they may go back out. You don't know.
So yeah, there is some monies that will be maturing here in November. I believe it's the the 5 million.
You're still getting right around 5, right?
Not quite that high. It is inching back up on the longer term stuff. On the short term, yes, it's right around 5. The short term in our California class, it's right at 5 or just a tick below. And the 1 to 5 years is now trending up to where it's 4 to 4.25. So they're kind of matching each other now. It's going. Well, I mean, after today, it's going to
Yeah.
do something weird. And then, a week or two, it might
Yeah, we'll talk tomorrow.
go back out.
Or next
Or
week.
next
So,
week.
Yeah.
We'll see.
Yeah.
The majority of our funds in class are at 5% now.
Yeah.
But
It's all good. Solar project is actually in the black. for now. Although it's not very much.
It's better than being on the road.
110,000, that's
They break even.
after 9 years.
Yeah, because I'm saying the last 2 years they're pretty much breaking even.
Yeah, and then we have to come up with what we're gonna get. We're gonna have less revenues from that because it's not gonna track, it's just gonna be stationary, so.
You know, it may not be a whole lot different than we've had because it's never seemed to work right.
Oh, well, so it may not change that much.
Yeah.
Okay,
It's 25-year guarantee on the project if they were still in business.
yeah, yeah, okay. All right, that takes care of item 8, the solar project. Item 9, committee comments. Do you have any comments?
Just congratulations to staff, great audit, it's great to see that we can submit to the award action once again, and good job.
Likewise, yes, thank you for your input. Staff did another great job. Item 10, review of action items, prior meeting, I don't know. Current meeting, I know we don't have any,
I mean, right now, there were none last time either.
and I don't believe we have any now. Setting agenda for next meeting will be January 21. That's pretty far ahead.
And you don't care, dude?
No, what you're wanting with it.
We'll call you, you can call.
Yeah. Any
You
other,
can zoom in.
any other comments?
No comments.
With that, we will adjourn at 5:57.